Siddharth Khemka joins us now. Siddharth, the buzzword this week has been Infosys. But after Monday's and Tuesday's price action, is the best of Infosys behind us now?
Yeah, so Infosys, if you see, the results have been quite encouraging. They are picking up in terms of the growth that was lagging for some time, and now our expectation on Infosys is that with the catch up in terms of growth to TCS, the discount that the market is ascribing to Infosys should also narrow down. So right now we have a very positive view on Infosys with a buy rating compared to a neutral rating to TCS.
Right. Siddharth, I don't know if you've managed to take a look at Mindtree's performance. What is it that you made of the sequential numbers? Looks just in line. Nothing big bang really reported there.
Yeah, so Mindtree was more or less in line with our expectation. If you see the numbers on a sequential basis, the revenue growth of 2.4% on a constant currency basis, it was about 18.6% on a Y-on-Y basis, which is in line with our expectation. We were expecting somewhere around 2.6% growth on a Q-on-Q basis. If you see what is changed is that from Q2 where the numbers were weaker, now the management commentary has become very strong. The exit run rate for Q4, the guidance has been also pretty strong. So that's something that lifted sentiments for Mindtree going forward. However, if you see on an overall basis, the numbers for we are more or less maintaining our estimates, future estimates. The stock trades at about 16 times FY20, which is comparatively cheaper for our expectation, and the growth that now seems to be much stronger. So right now we have a target price of around 1000 with 1 year forward target multiple of 16 times.
So that while we're still awaiting who's going to take the top slot or rather top job at Yes Bank and fill into Rana Kapoor's shoes, all names from Ravneet Gill, Rajat Monga, etc. being thrown around that the selection committee has proposed to the RBI. At 200 plus levels, would you be a buyer in Yes Bank until clarity comes in as to who takes over from Rana Kapoor?
Yeah, so those kind of news flows would keep flowing in. The good part is the stock has recovered from its lows, mainly on back of the names that have been taking the rounds in the media. So coming to the view, our long-term view continues to remain positive on the on Yes Bank. The bank has seen consistent. The operational business has not been impacted. There has only been a change in the leadership which will be affected, and more or less will come out with a name. So in the short term, it's very difficult to predict how the stock will react, whether it meets the street expectations in terms of who takes on the charge, or it surprises us and the stock could move up from here. So the short term volatility could be there. In the long term, the view remains positive. Whoever comes in will take in charge of a bank which has done consistently well. We have seen back-to-back RBI reviews of the books, and not much has come out of that. So there have been certain cases where there have been the differences between what the bank had provided for and what RBI wanted, but those have been operational in nature, and most of some of the other in the industry has also faced that. So having said that, yes, before the clarity emerges, difficult to take a short-term view. If someone has a 1 year plus horizon, wait for the name to come, clarity emerges, then take a plunge.
Rupee at 71.1. So it is it's the impact of dollar index. You know, we're talking about peak America. A lot of views are there that American economy is going to peak out or has peaked out in 2018. The strength in dollar, I think, has been far from unreal. Yes Bank 208, it was at 180 a couple of days ago. I want to mark Reliance, which has been a showstopper this week, and then Jet Airways in the pre-open session looks like could take a plunge. It has cracked by another 10%, and as we walk into trade this morning, it is Reliance Industries which is really doing all the heavy lifting at 1141. Siddharth Khemka, between HUL and Reliance, which stock will make money in this 2019?
So our preferred pick for 2019 has been HUL, the largest among the FMCG plays. So FMCG segment has been doing well for last few quarters, and we expect that trend to continue for this year, given that the rural demand has picked up quite a lot. If you see the management commentaries for most of the consumer names, the growth has been stronger, especially on the being driven by the rural economy. Given that this year we have the elections, there is a lot of expectation from the government to support the rural economy. So we believe that that could be a quasi play for the spending on the rural side. So we believe HUL, given that the earnings could continue to remain strong, although valuations are something that we can debate, we believe there could be a further 15-20% upside to HUL in the current year.
Okay. The other interesting one, Siddharth, is SBI versus ICICI Bank. They both are corporate banks. They both have similar kind of an approach in terms of in market positioning, and they both have a huge advantage over others, which is strong CASA and a great branch network. Which stock will make more money?
So very difficult to differentiate here. For us, the entire corporate lenders pack, that is ICICI, Axis and SBI, the three of them should do well. The thesis has been playing out for the last at least 2 quarters. Our expectation is that the slippages have come off. The credit cost would see some improvement, which will lead to profitable growth. And going on from here, we expect the credit growth, the loan book growth to pick up from FY20, FY21, which should drive the corporate lenders. So the entire pack of 3 should do well together. We have seen, so for us, all 3 we have a buy rating on all 3 with a potential upside of anywhere between 15 to 20% from the current levels.
Counting down to market open, and Siddharth Khemka is still with us. Siddharth, what are the top 2-3 mid-cap ideas that you're recommending from across sectors?
Yeah, so one of the sectors that I already spoke about, the FMCG sector that we like. So one stock that particularly we are recommending to our customers, to our clients, is Marico. We have seen that there's a strong performance of the key brand, that is Parachute. The strong volume growth continues in the recent quarters, along with healthy growth prospects which we have seen in the value-added hair oil segment. There has been a strong growth which has been backed by the rural segment, where Marico has a strong foothold, which should continue to lead the growth in the coming quarters as well. Another factor is that in the recent past, we had seen some of the new launches by the company that is now picking up pace, and that should also add to the overall business for Marico. And if you see our overall expectation for the company, the revenue and PAT growth of about 15 to 18% over the next 2 years, and valuations are given the overall pack, the valuations are on the higher side, but it's comfortable for Marico. So we have a buy rating on Marico with a target price of 465.
Thanks for those ideas. 4 minutes to go before we begin trade. Very quickly, let's highlight the top 5 factors to watch out for ahead of the session. And remember, there's going to be so much focus on earnings today. Reliance Industries is the big one. What they say about the refining business is something the market has already taken on board. But what can be sensitive for the price or the stock price of Reliance Industries is really the road ahead in terms of value unlocking for Reliance Retail as well as Reliance Jio. That's the big one. And I think that's what the market is hoping to hear in this quarter's earnings commentary. You have HUL coming out with numbers. Again, it's going to be the volume growth figure, the demand outlook that HUL will indicate, which will influence the stock price when we begin trade or through the session actually. So keep an eye out for how HUL's earnings pan out. Kotak versus RBI case, all eyes are on the Bombay High Court's decision. and we'll have to see how that plays out. Jet says a turnaround soon, banks await Jet offer. There's a price that Etihad has put on the table which is 150, way lower than where the price is currently, but that's all that they can offer, with some waivers and riders coming in offsetting the clause for an open offer. After Morgan Stanley, JP Morgan is turned cautious on IT, so do not expect fireworks in that sector, as most brokerages are being circumspect about the growth prospects here for the sector, which has done really well in the year gone by. And then corporate banks continue to rally, supporting market momentum, so you need to keep an eye out for ICICI Bank, Axis Bank, and let's see whether speculation can drive Yes Bank higher as well. 2.5 minutes to go. Very quickly on corporate banks, Siddharth, I don't know whether you've touched upon this story, but Yes Bank and the momentum that's driving the stock there, what would be the pecking order between a Yes, ICICI and an Axis?
Yeah, so we discussed briefly about the corporate banks. So the preferred order for us would be ICICI, Axis, then maybe a Yes. Given the uncertainties that cloud Yes in the near term, that sees a that is on the back burner. We clearly, as we also heard Manish yesterday and today you played the video, we are very positive on the overall corporate banks as a space, where we believe that the first round of profitable growth would be coming from the lower slippages, the improvement in the asset quality, and the next round from should be with the loan book growth. The entire NBFC the issues with NBFCs has come at a time where these banks have now tightened up their balance sheet and ready to grow. And given that NBFCs were taking up a bulk of the market share, which will now slow down, and at the expense of the corporate banks which have access to the low cost deposits, they should gain market share given their cost competitiveness in the current environment. So ICICI, Axis, and then Yes Bank.
Okay, just a minute and a quarter left to go before we ring the opening bell for this Thursday. Siddharth, great to have you on the show. Thank you so much for taking the time out and chatting with us about markets and of course individual sectors as well.